Hi, I'm Eric Zaunscherb. I'm the CEO and chair of GR Silver. We are listed at GRSL on the TSX Venture, and we are focused entirely on advancing the Plomosas Silver Project in Sinaloa, Mexico.
Lovely to see you, Eric. In fact, we did cross paths in London, where we may have ended up at one of the same events. Glad to see you. We caught up in May with regards to GR Silver. I think at the time it was okay. You were kind of the new boy to the team, because we'd previously spoken with Marcio. That was a kind of cleaning up of balance sheets, trying to understand what information you had, what assets you had, and more importantly, trying to coming up with a plan and a way forward for the multiple assets that you've got. Now you've had your feet a little bit longer under the table now. So with regards to Plomosas, San Marcial, and also La Trinidad, where are you? What have you decided to do in terms of best foot forward?
Well, I think the key back in May even was to focus on the Plomosas project, which has two areas, the Plomosas mine area and the San Marcial area, which is about 5 kilometers to the south. So focus was the key word. And I would say that we have a new keyword or phrase over the last few months through the exploration work that's been done, and that is cross structures. And so the evolution of the geological model, the exploration model that has been promulgated by Marcio and the geological team, is all about the impact of cross structures, and we see that at both the Plomosas and San Marcial areas.
Okay, well let's go with the focus bit first. Okay, now I do remember the strategies. It was about grade and expansion. It was also other words we used. With a grade with regards to Plomosas, and expansion with regards to San Marcial. Now, what's happened there since May? You've raised just shy of $5.5 million. That helps, takes pressure off, gives you optionality. But give us a kind of little more of a deep dive on Plomosas first of all, if you don't mind.
Sure, not at all. Okay, so Plomosas project is the grand 430 square kilometers that is core to the company. Within that are the two key areas, the Plomosas mine area and the San Marcial area. Again, only 5 kilometers apart, so great opportunities for synergy moving forward, et cetera, et cetera. At Plomosas, the defining question was, what is the grade? Okay, so that is what we got into in our previous discussion. At Plomosas, we put out a resource in August 21. The grade averaged around 45 grams per ton silver, which is clearly not economic and which set the stock back a great deal, but we wanted to get that data out into the public domain. Hundreds of drill holes, historical information, etc., all good. So now you start off with that and you say, okay, now that grade is not economic, but there's a huge disconnect between the 45 grams per ton in the resource on average and the average historical mined grade of 190 grams per ton. That's a huge delta. And that comes down to the fact that of that historical database, the vast majority was those holes were selectively sampled and assayed. The focus was previously as a base metal mine. They sampled where they saw sphalerite and galena, so zinc and lead mineralization, and did not sample outside of that. So our task immediately then was to launch a very surgical targeted infill drill program at Plomosas in order to ascertain what the true grade is. And over the last year, if you look at it, we have published numerous news releases, tens of holes. In fact, we by the end of September at Plomosas, we had drilled over 5,700 meters in 126 holes, and so very short targeted holes, as I said. And those intersections are demonstrating a much higher grade than the average grade published in that resource. And so we're getting some very nice results there. What we're also finding at Plomosas is I had originally assumed that resource update would be roughly the same volume, the same mass, with just a higher grade. But we're finding these cross structures, and now I'm getting to my theme. We're finding these cross structures that are secondary and tertiary, that cross-cut the original hydrothermal breccia, and they elevate the precious metals content. And we're finding continuity on those structures, both in the hanging wall and the footwall. And there we're getting beautiful results like 41.5 meters of 518 grams of silver equivalent. So there's some very nice mineralization there. That's the focus.
Well, okay, so the grade answer you've started to address, and obviously there's a massive press releases out, highlighting some of these intercepts that you're getting. How much more work, how much more money, how many more meters of work do you need to do on Plomosas before you kind of feel confident that that's something that you can park up, or come back and address at another time before kind of. I don't know. It depends where you're going to reallocate your resources, because we did talk a lot about La Trinidad last time, and it feels like you have parked that up.
Yeah.
Am I mistaken, or will you be trying to get the Holy Triumvirate working all at the same time?
Well, we'll talk about San Marcial later, but if you focus on the idea that we will be delivering mineral resource updates in the first quarter of 23, as we promised, both at Plomosas and San Marcial. That has been the focus of the company. So delivering those mineral resource estimates. And in the interim, La Trinidad, when we acquired that, had over 1,000 drill holes in the database. There's a huge amount of lithogeochem, geochemistry, geophysics, and so on that all needs to be compiled in a digital sense so that we can develop an appropriate exploration model for that area. So parked. No, not necessarily in the spotlight, but in the background, there's a lot of compilation work and so on that's going on there.
Because I guess what I'm trying to get to with companies, and we're kind of doing a kind of summary of what we talked about last time, and you've given me an update of some of the things that you've been doing, but it's been a pretty crappy market for silver for 18 months, 2 years, right? And there's lots of Mexican silver stories, and they're all of a certain size, right? So very hard to distinguish. So many people have been saying there's just too many companies out there. There's too many companies. Yeah. And we've got to try and work out who's going to survive, who's going to be able to access capital. You've shown that you could back in August, and you may have a view about the cost of that capital to, given where the share price was at. But I'm trying to work out how companies fund themselves, who's gonna survive, who's gonna still be here when we come out the other side of this cycle. And we've seen a whole bunch of quite interesting strategies employed. Some people going for DSO strategy, so direct shipping, or strategies just kind of get some revenue going, which isn't dilutory. Others saying, well, actually, we're gonna spin out, sell, JV, other assets within the portfolio. So in terms of the optionality available to you to deliver, so did you say Q1 for the resource updates?
Correct.
Right. Okay. So it's imminent. So there's I guess there's very little new financial structuring or restructuring you can do, because you're due to deliver those imminently. But what are the kind of big problems that you're trying to solve outside of and you'll tell me about the resource update in a second, and or how that contributes to your ability to kind of keep this company going. I apologize, but it's where I want to be. I want to get to the show me how this thing survives, show me how you win.
Absolutely. This has been one of the worst markets in 40 years, at least, that I've been tracking various metrics and in terms of performance for the small caps. And so how does one survive in such a market? And there are different options. You can sell things off. You can, play a possum and say, I'm done. We're not doing any work. We're preserving the capital that we have, and so on. And I think that's a surefire way to guarantee that your stock goes to a minimal level. From my personal philosophy is that when you're onto something good, as I believe we are at Plomosas, is that you continue drilling, you continue to deliver ounces, you continue to do what you promised. And so, as you alluded to, we raised money in March, and we raised money again in August. We were able to attract $13 million Canadian to the company in one of the worst markets in decades. And one does that by making sure one has a very clear story of what you're going to accomplish, and then going out and working hard and delivering a message to the capital markets to say, here, this is what we're doing, and we're going to deliver on that. We're going to deliver on additional ounces. And I think that is expressed as a former analyst. we don't have a technical study at this stage. So comparing with other companies that have resources but not technical reports as yet, is that we were trading in July at 41 cents US per ounce in the ground. And the peers at the time, and that's a broad peer group, was trading at around $1.76 US per ounce in the ground. We're talking measured and indicated ounces here. Since July, we have taken that 40 odd cents up to currently $1.04 per ounce, while everybody else, in terms of the mean, has stayed flat. That to me indicates that the market is saying what we're doing is correct, that we're increasing the value of the ounces that we have. So that means in the first quarter, we are going to deliver more ounces. I believe we're going to deliver more ounces at a higher grade, and that consequently the market will value us at a higher level in terms of enterprise value per ounce in the ground. That is what we're doing.
Yeah, I'm not sure what I think about technical studies, because very few companies have them, and the ones that do them do a really bad job. Very few do decent technical studies. So I'm getting distracted. You make me think. Okay, so that's a way of you valuing your asset, and that may be a way of you saying to investors, and I suspect not retail investors, but to maybe more on the institutional side, at your levels, maybe not. Look, we're doing a good job. We're getting higher grade. It's cheaper ounces in the ground. Please give us some more money. But it's still it's an environment which is very bitty, and people are not rushing to throw money at silver companies. So you've got to have a view of some of these other optionality components that you talked about. You referenced in response to my very long question. Have you got anything in the offing that you can do to, if the market doesn't give you sort of cheap capital?
Sure. I mean, what's our plan B and our plan C is effectively what you're asking, right?
Yeah.
Right. Well, okay. I mean, we're not resting on our laurels. We're proceeding with the exploration side and delivery of those resource updates. But of course, we're also in discussions on the potential for strategic investors. And so the companies have been very successful bringing in a known entity for a 9.9% interest in the company that provides validation of what we're doing. So whether that would be a strategic in the form of a producer of silver, or in the form of a well-known name in the space, these are things that are beneficial to a company and are possibilities, and certainly are being evaluated.
Well, the possibility, but you've already got First Majestic Silver in there, nine, just over 9% already. So it's not. Yeah. Is it likely that you would attract someone else of that ilk?
I think it's highly likely. When you look at First Majestic got its position through vending one of their properties into our package. And that's great. And they've been a wonderful partner. They've been active in the market. They've participated in some of our issues. And I thank them very much for that support. But I think it's extremely important to bring another party in. One, to provide additional validation, but two, to also provide some competitive tension, if you will. And so that's important. Another plan or an option C might be to look at our royalty situation. So because it is the amalgamation of several project areas that individually consist of multiple concessions, there's a real hodgepodge of royalties on these properties. And so there are excellent companies out there that are in the business of creating royalties. And so from my perspective, if we could take a look at our royalty situation and consolidate that, deal with the purchases that we have available within that, and then some of the funding sticks to us, I think that that's another less dilutive or non-equity dilution form that would be beneficial to the company.
Right, but that's kind of option like E or F, right? You don't want to kind of give away the kind of future upside if you don't have to. So, yeah, I would argue. But then I'm not in the position that GRSL Silver is, which is trying to eke its way forward. So I guess we now come naturally onto the resource updates. The trouble with resource updates in the last 18 months is when they come in, people used to talk to me about catalyst moments, and resource updates would be one of them. And the markets have looked at some of these numbers and just gone, I don't care. right? And that's been a real response. So one, timing of the resource. Is there any point putting anything out Q1? And two, if you do, and there's a kind of poor response or a shrug of the shoulders, what do you do?
Yeah, well, first of all, one has to do what one promises. We are drilling into December. We have just a handful of holes left. When that is complete, then we will have news flow into January based on the final drill holes that we have. The turnaround we're seeing in Mexico has improved vastly from 7 or 8 weeks in the summer of last year to something closer to 3 or 4 weeks. So by the mid to end of January, we will have all the assays that we need. We're going to plug them into the model that's already very clear and generate a resource update. Now, whether anyone cares or not, that's another question. That's, of course, a market-dependent question. The market today, if we look back the last 40 years that I have data for at least, traditionally December is the number one time to invest. And so that is the end of tax law selling, the beginning of the Santa Claus rally, running into January. And traditionally, we see January, February being the best window for financing for companies as that positive momentum plays out in the market. And so that is the number one thing for us to focus on, is if we can deliver into that market our resource update, i.e. a market that cares, that's something that we're aiming for.
Okay, so in a market that cares, maybe everyone should do well. Market that doesn't care, what would you point them to? So you've got to be aiming for a certain size of resource, which you think is important enough to talk to the market about. You've got to be aiming for a certain grade that you would hope to be able to achieve. So what would you point people looking at all of these silver company options that they've got available to them at the Santa Claus contrarian sale that's going on and say, this is really important, guys?
We've been marketing heavily and preparing the market for what we're doing. As you know, Brenda and I were marketing in Europe just a few weeks ago. We had extremely strong responses in Zurich and Amsterdam and London. And so everyone is aware of what we're doing and looking forward to the delivery of that resource update. And if we move from a position of an average grade of around 45 grams per ton silver, which is frankly rubbish, into an area where people go, yes, this is great. This is closer to an average of 190 grams per ton that was being mined there before. That is a significant re-rate. And I would suggest that moving up from 40 odd cents per ounce in the past to something over $1 is already recognition that we're moving in that direction. And we should continue to move in the direction of the mean, which is more like $1.75 US per ounce in the ground. So there's great momentum there already, and I think that the market will be very receptive to an upgraded resource.
Okay, so you think this thing has legs? Since I saw you in May, the work that you've done, the results, the grades that you seem to be getting, you still think this thing has legs and can make it past the finishing post?
Well, we haven't even talked about the southeast discovery at San Marcial.
You're right. I got distracted thinking of other things. San Marcial, you did signpost it to me back in May. So what's happened down there?
Well, in May, we were talking about the recognition that San Marcial as a deposit, the hydrothermal breccia, lives at the contact between the upper volcanics and the lower volcanosedimentary package. Okay, great. So we've got up to 7 kilometers of that contact that snakes off to the southeast. A lithogeochem survey highlighted all these beautiful silver anomalies at surface. And we began to notice that there was a really strong deflection along that contact. And geologists always salivate over deflections in contacts and structures and things. And so detailed mapping showed that there's the importance, again, the word cross structure comes up. These cross structures that run across to the northeast, and there's a structural corridor that deflects that contact. So boom, we put in hole number 10 into that area, more or less a blind discovery off about 250 meters to the southeast from the main San Marcial area, and boom, we intersected 101.6 meters of 308 grams per ton silver. Note, silver, not silver equivalent. So San Marcial is very different from Plomosas, which is a polymetallic deposit. and it is in fact a silver deposit. Okay, so the majority of the value is in silver. And that's something that's highly attractive to the silver producers out there, and they've certainly taken notice. So we're finding not only are these cross structures giving us this structural corridor that has this additional silver mineralization in it, we also reported in our last news release that we received, we intersected a meter of over 35 grams gold in that. And so there's the indication that there's also some high-grade gold mineralization floating around that we need to drill further to understand what's going on there. And to be relevant, I think it's also important to point out that just to the north of Plomosas, we have a private concession, a Mexican mining company that is operating an underground gold mine. And so we know that this is in the system. And in this 430 square kilometer property, there's a lot of potential.
Right, potential.
Absolutely.
Give me some more than that. Talk to me about how much new data is actually going to go into the resource. I think we did talk about recovery rates last time, and they seemingly quite good. Is that right?
Yeah, at San Marcial, we're getting preliminary metallurgy is suggesting between 90 and 93% silver recovery.
Super stuff. But in terms of so what depth are we at? It was fairly shallow stuff as well, wasn't it?
It is. It's we're finding that mineralization tends to be at around the 550 to 650 meters above sea level, which is 150 meters below surface. And that's also on the slope. Right. And so you can do a half pit to gain good access to that mineralization.
Right. And how much money are you throwing at that?
Well, we will have drilled approximately 12,000 meters by the end of this year between Plomosas and San Marcial, roughly 50-50.
Right. Okay. Interesting. And so that leaves you in a position. So is this a case of like, all bets are on the two resource updates? Is that right? Someone said this to me the other day. A CEO framed it, and I think it was the Adventus CEO. He positioned it as a bet, and I'm like, well, crikey, that's not a word I would use.
A lot of people call the TSX Venture Exchange a casino, and I understand the speculation angle that people might view it as. But when I look at it, and I've got great geos like Marcio and the team working here, this is at worst an educated bet, but I prefer to consider it to be science and engineering that is going on.
Good answer. I like that. But okay, so in terms of the de-risking components here for you that you have engaged with since May till now, I think you kind of outlined some of the things that you're doing. So again, I come back to that question of when you've got investors looking at what you're going to present them with regards to the San Marcial area, what would you point them to? What's important? Don't fill the room up with words. What's important?
Well, we've focused to deliver these resources in the first quarter. We've demonstrated that the geological model has vastly increased the hit rate on high-grade mineralization. We've demonstrated that. We are going to deliver these resource updates, and then we're going to make a decision. We need to see what those resource updates give us. But then the focus moves from first quarter of 23 to the end of 23. The next logical step is a preliminary economic assessment. And I know you've expressed your disdain for technical reports, but one needs to start putting economic parameters on something like this. And that's what an integrated operation is, what will be studied in a preliminary economic assessment. And so that's what we need to raise money for in the first quarter to deliver a full year of drilling and technical study.
There's disdain when companies go early on that stuff from me. But I'm interested in the amount of contained metal. That's what I'm interested in, because that defines the economics. Certainly at these kind of shallow depths you're talking about, recovery rates that you're talking about, and now hopefully these grades from the headlines you've been putting out are indicative of what you continue to see there. So at the right time, they're great. They're an indication of what the economics could be. Likewise, this year, companies putting out economic studies have been absolutely beaten up because inflationary effects on the capex, opex, etc., have been quite painful for the market to recognise. So not too many people rushing into that process. You think by the end of this year, things may have calmed down?
I think that we'll be looking at a very different market in the first quarter, to be honest. I'm not a bull on certain metals. What I am is someone who's followed companies for a long time. And as long as you're in the top quartile in terms of economics, in terms of margin, for that commodity, then this is a stock that will move. If there's a tailwind from the commodity, then fantastic. Where silver is concerned, I guess my own personal opinion is that it is half precious metal and half industrial metal. And on the precious metal side, I think we're coming closer to a pivot in global central banks in reducing the rate at which the rates are increasing, and as we get to a slower rate increase and then a plateau, that's going to be positive for precious metals. And we all know that silver is more volatile than gold. And so if we're coming into a positive precious metal market, then silver has a very good chance to perform well through 2023. From an industrial perspective, you're looking at sort of, depending on who you ask, 12 to 15% of total silver demand is now from solar panels and photovoltaics. And so consequently, that's very positive for silver. And then my final point on silver would be that the physical inventories have absolutely collapsed. And so that should also have an impact on the pricing of silver. So if we are coming into a positive silver market, then by all means, one should have silver exposure. From that perspective, I always prefer the barbell approach, where you have on one hand the producers, the highest quality producers, and at the other end you have a basket of exploration stocks. And I think that GR Silver belongs in that basket, is a company that is not just delivering growth, but also delivering an increase in the way those ounces are valued. So that is my investment pitch, if you will, for GR Silver in a nutshell.